Markets are near record highs. Toronto hitting a record yesterday, and asset valuations are pretty rich. Remember, Martin Cobb told us this week that banks are trading at hefty, in the US, trading at hefty multiples of their book value. Let's get more from Karl Schamotta, Chief Market Strategist at Corpay. Karl, thanks very much indeed for joining us. I know the stock market a notoriously inaccurate economic predictor, but investors seem to be feeling pretty good about the outlook right now.
Yeah, no question here that there's enthusiasm out there. It's interesting. I was kind of, reviewing all of the year ahead outlooks provided by major banks globally, in December and early January, and virtually everybody is optimistic on where the global economy is headed, where, corporate earnings and corporate valuations are headed. There's, of course, some, talking about a bit of risk, but at the end of the day, it does seem as if, the resilience of the global economy last year has translated into a much, much more optimistic view on what might happen in 2026.
I have to get your view on this canola versus electric vehicle story. Last year, Canada's canola exports were around $15 billion, but our auto exports were well north of $40 billion. I mean, it seems a little odd that we are bringing in a highly value-added, manufactured, high-tech product from China, but we're exporting canola. Is there something wrong with that picture? I mean, it makes us feel a bit like sort of a second-rate economy, I think, if we're just exporting, seed oil to China.
Yeah, it's interesting when we look back at history, right? There's the old idea that the Canadian economy is the hewers of wood and the drawers of water. That we're, extraordinarily focused on commodities. No question when it comes to China, the reality is that you're talking about a manufacturing superpower that is rapidly moving up the value chain. And that, that means that when it comes to, a competitive advantage that Canada might have, it probably is on the resource side, right? It's very difficult for Canadian manufacturers to produce high-tech goods, especially something as complex and as international as a vehicle, and export that into China and remain competitive. While on the other side, China has the supply chains, it has the scale, it has the capacity to export competitively. So I do think that to some extent, at least, the Canadian government is focusing on what we can do well, and looking to use that lever to improve trade relations and to improve the overall trade balance that Canada runs with the world.
Is it a thing we should be worried about, though, that we're just a raw material exporter? I know there's some value added in canola processing in this country, but it's essentially just a commodity that trades on price.
That's right. And margins are very thin as a result, right? And so, yes, unquestionably, Canada should work to improve competitiveness. We should try to establish, some areas of advantage that Canada has relative to the global economy. And I think, just sort of looking at that from a broader standpoint, one of the challenges in recent years has been the level of groupthink, I think, among, Canadian politicians and their equivalents globally. Everybody was doing batteries and electric vehicles at the exact same time.
Yes.
Everybody's trying to subsidize the exact same industry. And the reality is Canada can't win at that game, especially against, the behemoths in the world like Germany or Japan or the United States, right? It's just not something that we can do. Instead, I think what we should be doing is pivoting and looking for an area that others are not covering that well, and where we can establish a beachhead, as it were, from a technological standpoint.
I'm just thinking about the Dutch. They're always pretty smart, and they have a lock on certain areas of the chip making, semiconductor equipment industry. In any case,
that's right.
Let's have a look at the U.S. dollar. You reckon there are a lot of bets being placed against the U.S. currency right now?
Yeah, and that was kind of the funny part because when we had that opening discussion there, it sounded like I was very optimistic on where things are going. But the reality here is that I do think that investors are crowded into a number of very simple trades right now. As you mentioned, the equity markets are trading near historic highs, especially if we look at price to earnings ratios. When we look at the U.S. dollar, virtually every consensus forecast out there right now, every major forecaster is bearish on the U.S. dollar going into this year. And to me, the concern here is, what if the U.S. economy outperforms in the first quarter? What if we start to see, better data than had been anticipated? What if we don't see the restraints on, President Trump that market participants are expecting? What if we see fiscal stimulus hopes in other countries becoming a little bit more nuanced? If all of that kind of comes through, we could see the U.S. dollar rebound and sort of initiate what we call a short squeeze against all of the speculative money that's currently stacked up against it.
Against the US dollar. That's interesting. And sorry, you may have mentioned this, and part of that betting against the US dollar is that the Fed might be forced to turn dovish, or whether Mr. Powell is replaced or not.
That's right. I think the big bet here is that that the Fed within the period immediately after Powell steps down in May immediately starts to cut and cuts fairly aggressively. That puts downward pressure on U.S. rates and narrows rate differentials between the U.S. economy and its equivalents globally. And of course, the other piece of that sort of expectation in markets right now is that other central banks are going to stay on the sidelines, right? The Bank of Canada, the ECB, the Bank of England, all of those are either going to cut very incrementally or not at all. And so, the challenge here is, what if the U.S. economy does provide more, or does prove more resilient? What if officials outside of the Fed chair don't, sort of sing kumbaya and go along with whatever Trump's appointee wants, and we see a slower pace of cutting? If that all pans out, the reality here is that a whole lot of market assumptions that are sort of downstream of that monetary policy expectation could be toppled.
Karl, thank you very much indeed. Have a great weekend.
You as well. Thank you.
Karl Schamotta, Chief Market Strategist at Corpay.